Hello everyone, and welcome to the Pivot Boss Monthly Market Outlook for Monday, March 1st, 2021. Very good to see you all today, and welcome to the Monthly Outlook. It's always fun to do this once a month and free and open to everyone. Before we begin, though, I do want to point your direction to pivotbossmasters.com/profits. I will be hosting a Pivot Boss Masters open house Wednesday, March 3rd at 12 p.m. Central Time. This will be recorded, so if you're not able to join live, then I will post the recording. If you can make it live, you can ask the questions that you want to have asked at that time. And by the way, for those of you that are in the room right now and live in the webinar, you can start typing in any request that you'd like me to see, whether it's futures contracts or whether it's stocks or ETFs, whatever you like. Type them into the chat there, and I will do my best to get to those as we continue through on the webinar. For those of you that are part of Pivot Boss Masters, you'll see that we do have our upcoming Masters schedule right here. If you are already a member of Pivot Boss Masters, all this live training right here is free to you. If you're not part of Masters, I strongly suggest you check it out. It is phenomenal training that continues to give. It's the gift that keeps on giving. You pay one time to become a member, and you get access to all the current on-demand training, all of our tools, and all of our proprietary indicators, and then you get access to all of the various ongoing training and tools that we provide throughout. So you can come down here and you'll see all of the various things that you'll get access to here just by simply joining. So next week we do begin our live training for Pivot Boss Masters, including introducing Squat 2.0 and also the Pivot Boss Oscillator with advanced volume. It's going to be a lot of fun next week, and looking forward to it. So if you want to be a part of the open house, there is a Zoom link here that you can click. Again, that will be March 3rd at 12 p.m. Central Time, and we will do a walkthrough of the various training that you have, all the proprietary indicators that's available to you, and all the goodies that you have access to. So check it out at pivotbossmasters.com/profits. All right, let's get to the charts here. Now, very interesting market that we've been seeing here recently. An incredible round of strength that we've seen, especially from last year's March lows. Incredible round of strength even out of crude oil just since November. We're going to cover a ton of charts here. And again, if you want to post any recommendations, I'll get to those as well. We're going to start off with crude oil. And what I do want to do is bring up crude oil in the weekly time frame. Something that we talked about during the January monthly outlook was the fact that based on market structure here, we were about to see perhaps a tremendous rally. Based on this market structure that we saw here, after that big push back above 50 bucks, we were looking for a push that would take us to the $65 level. And you'll notice that last year, to begin the year, 65 bucks was rejected, and we went right down to 50 bucks, which was the bottom of this market structure. Eventually, a breakdown occurred, and price dropped not only to these lows here, but for the forward contract at that time, it dropped as low as negative $40. So it's never been seen before, but incredible move. From those lows, we've now recovered, rallied all the way back to 40 bucks, which is an important lower key zone here. Once we were able to reclaim 40 bucks, 50 was right around the corner. But again, the market structure that we talked about at the time was if you get above 50, it opens up a move towards 65. We've seen that play out very nicely here recently, and we've gotten as high as, I believe, 64 and change. Let's see, the high here last week was 63.81, so almost to 64. We are getting close to the point where we may begin to see some weakness now. Perhaps there's one more round of strength that could be seen. But again, the 65 to 66 zone is a very important zone to continue to watch. Typically speaking, whenever you do make that move across the market structure range there, very similar to what we saw here, there is a tendency to drop right back down to the bottom of that market structure. And in this case, the bottom of this market structure would also coincide with composite VPOC. That is value. Value right now, at least on a 10-year basis, is 52.27. Right now, price closed at 60.20 today. And while we did see a round of weakness over the last several days, any bounce from here could be short-lived, as any rejection at 65, perhaps as high as 60, could lead to weakness back down toward 50 to 52. Now, typically speaking, when you see that type of price action occur, again, based off of this market structure here, you can see we have that market structure, we have the one just above it here. Whenever you get that move across the range, you tend to drop right back down, and then you tend to reject and bounce right back up and continue trading in this range for the foreseeable future. So we could be range bound between 50 and 65 over the coming months. Again, if there's any failure to hold that 50, it would open up a move right back to recent support, perhaps as low as 35. But at the moment, everything suggests range bound trading action, very similar to what we saw prior to last year. So this would be 2019 right here, where it traded happily between 50 and 65. So again, during the monthly outlook back to begin the year, we were looking for 50 to 65. We've gotten as high as 63.81. And again, now that we've gotten close to this upper edge, it's time to start looking for signs of broader rejection, because at that point we could be looking at a drop right back toward value and the lower edge of the range. Once that occurs, or should it occur, we'll be looking for a rejection that leads us right back up and back and forth trading action to play out from there. So right now, crude oil getting to the point here where it could be a little bit overdone. You can see back here from that day right there, that was a significant rejection to begin the November month. We talked about that bullish outside day during November and how it likely leads price back toward recent highs. It did that and then some, and got a significant continuation to the upside. One thing we talked about in the trading room today is how the recent 2-day range here, so from Friday's high to today's low, is perhaps one of the biggest we've seen during this rally since November. So if we drop the Pivot Boss Advanced ADR indicator down a bit and put it down to 2 days, we can quantify that 2-day range, and you can see that it is one of the two biggest, or one of the biggest days we've seen. So right here, this 2-day range right there, there's only been a handful that have been as big as that, and most of these have been to the upside. So that was a big 2-day up move. This one right here, again, 2-day up move. This one right there was a 2-day down move, followed by these two, which again were up moves. So right there, that down move is here, and it coincides with that range here. And so it's right in line with the type of weakness we've seen during this up move right before it turns around and pushes higher yet again. So right now I'm not ready to quite say that this is it and we're about to drop down. One thing we look at, especially for those of you that have my book Secrets of a Pivot Boss, is that we look for higher value relationships based on the pivot range. This is the pivot range here, then it's higher. There's the pivot range there, it's higher. Here it's higher. And this month it's also higher. So in that bullish uptrending market, any early weakness to the pivot range is typically seen as a buying opportunity for a continuation higher. Right here you see a drop into the pivot range for a continuation higher, and right now you're seeing a drop into the pivot range and into the bullish Pima trigger zone, which could lead to a continuation higher. This next move, should it occur, is likely limited in the upside push that it could see. Again, we talked about that market structure, but look at that LVN right there, that CLVN right there, comes in just shy of the 67s. That could be a tremendous line in the sand there. So if price were to rally off these lows, we may see a move towards 67, and any rejection there could then lead to a return back down toward 50. Additionally, if this low is in, which it's likely to be in. Tomorrow we may see a push downward. If we can see a rejection tomorrow at these lows, or a failure to hold below today's low and close, that could catapult things higher. And now you're looking at this range right here between these two green lines, and that is our Pivot Boss ADR targets. So based on average range over the last 10 months, those would be the targets that we would shoot for based on the average volatility of this market. So if we see a little bit of weakness tomorrow, anything below 60 or perhaps in the 59s, we want to see some sort of rejection. That rejection could then be met with additional strength that pushes us higher into these upper targets. Somewhere between 65 and 67 could be the next target zone for this one, but then expect broader weakness to perhaps come into play that could return this thing back toward 52s. Where this thing breaks down is if price can't hold that previous month's close, any failure to, or rather the previous month's midpoint, that level right there, if there's a failure to hold that level, it opens up the previous month's low. Again, that pushes you just below the 52 level. So there could be a significant drop if price can't hold that midpoint from last month's range. So that's a look at crude oil right now. Very bullish overall. It's continued to see strength in the Pima trigger zone for many, many rotations. Again, all good things do come to an end at some point, and if it's now, it would be seen at that midpoint. So still expecting a little bit of rejection tomorrow that could lead us higher, but we're closer to the end of this move than we are to the beginning. That's very clear right now. So looking for this thing to kind of fall back here at some point. The next one I do want to take a look at right now, based off of market structure, is GC. That's gold. Gold has been weak throughout the year so far, and you can see right here a significant rejection took place the third trading day of the year. It happened right off the 1960 level. This was a level that from this low we were looking for a return back higher toward 1960 to 1980. Very similar to what I just mentioned in gold and crude oil. I said, you know, we're closer to the end of the move than we are to the beginning. So if we come into 1960 to 1980, expect a return back down. The return to the downside was much more significant than I would have anticipated, and now since then we've had a pattern of lower highs, lower highs, lower highs, clearly lower lows as well. The other thing you'll notice is that we have taken out significant support at 1760. That is a tremendous market structure level. You can see it broke down below it on Friday. This morning the weakness was met right at the monthly pivot range and dropped downward. That's tremendous. One thing we've talked about over the last couple of monthly outlooks to begin the year is that based off the weekly time frame, this pattern right here that we just saw is very similar to what we saw back here, and this was quite a while ago, nearly 10 years ago. But you see a significant blow off top met with lower highs and resistance at a lower level. That's what you see back here. You see that significant blow off top followed by that 1960 to 1980 resistance. And I mentioned last month especially that if we take out that 1760 level here, it will look very similar to taking out that 1525, which opened the door to weakness up ahead. So we are seeing similar price action now upon a violation of that 1760, and that has a couple of downside targets that could be in play, the farthest of which is 1525. So over the course of the year, we may see this thing continue to push downward toward 1525, which would be the bottom of this market structure. So you have right here 1800 down to 1525. There's your market structure. The fact that we've given up the top end of that range, again, odds would suggest that you would rotate back to the bottom of that trading range and then perhaps start to trade between 1525 and 1800. So right now this is a significant breakdown in gold The daily time frame, again, if you look at it here, looks very similar to what we just saw in the weekly time frame. And based off of recent price action here, which is back last spring, you would, again, in failing to hold, the top end of this range here, you would likely rotate back to the bottom of that range. That would coincide somewhere in the 1660s. So we have more downside that could be seen just in the near term, where this thing drops into 1660 and perhaps retrades back through that range. So we start to trade somewhere in here before perhaps making a move down to that 1525. So right now, any bounce, even as high as 1800, could be seen as a selling opportunity for 1660 and perhaps a continuation throughout the year into 1525. So a significant breakdown in gold, 1760 there, opening the door to perhaps more weakness ahead. So that's pretty tremendous right there for gold. Another one I wanted to talk about here is the NQ. The NQ clearly has been super bullish, especially from the lows. Tech has far outpaced most of the market here outside of the Russell 2000. Significant strength. This one, though, did see significant weakness compared to the rest over the last couple of weeks. From that pivot high, this one has had a more dramatic pullback from pivot high to pivot low. One thing we've noted in the trading room is how the volatility is expanding right now. Each wave is getting a little bit bigger than the last, and that could be indicative of increasing volatility to come. We did see a very strong bullish day today. A tremendous push through the previous session's high, a continuation. That's pretty significant. One thing we'll be looking for tomorrow, or when the market reopens here after the close, is for how is price going to respond to the previous session's high and close. So where today closed the day, where today's high is, how does the market respond to that zone early and after hours trading or during pre-market trading tomorrow? Typically speaking, there can be a fade after trend day, where any rejection at these levels could open up a rotation back down toward the previous session's midpoint. So at the very least, we may see a move that takes us back to 13,132 early tomorrow morning. If that midpoint zone or the breakout point can't hold, then you may see an even deeper flush that turns into a bearish outside day, very similar to what we saw last Thursday. So last Thursday, a push above two-day highs failed, and once that failed, it rotated back to the mid. Bulls were not able to keep that area bid, and instead it flushed even more. So pretty tremendous how that has played out so far. While this market remains bullish overall, where this thing really breaks down is right in this zone right here. 12.6, 12.465, somewhere in this zone, right? You can see clear strength here. 12.646 is the FOMC key level from December 16th. And the top of this key range here is 12.465. So I've continued to talk about that level for a while now. And if for some reason there's a failure and we break through that zone, that opens up clear targets down below. The next one would be that 11.6. 11.6 would be the midpoint of the key range. You have a rising 200-day right there, and somewhere in this zone could be a trap for a push higher, and you perhaps trade somewhere in here. So right now, again, very strong overall. Not trying to ring the bells about major rejections just yet. But if we start to see some lower high come into play here, or if we fail to hold 11.3, that could open up some weakness and put some downward pressure on lower support. Again, 12.646 is a big time level there, the FOMC key level. Right now it's trading the FOMC key level from January 20th. If there's a rejection there, that could open up some weakness. But at the moment, things continue to show strength. Price pushed through the previous week's midpoint. It's holding above the previous month's midpoint at the moment. So any early weakness tomorrow could still be met with strength that leads to a continuation higher into 13.9. So right now, still more upside until proven otherwise, but clearly this market is starting to show a bit more weakness than what we've seen here in the past. But really the breakdown occurs here. That break would open up quite a bit more weakness across the range, and until we do that, major weakness still to be bought until proven otherwise. Right now, one thing to watch here is Bitcoin. We talked about Bitcoin last month and over the last couple of months. This key range came in handy very, very nicely. When that key range was developed here early in January, in the room there, in our trading room, we talked about anything below 30K could be an opportunity to double this thing or get very close. Any push off of this zone, any trap down here could open up a move back toward 42, followed by a continuation into the 100% target here, and that's 54,488. So this is a month has passed now since our last monthly outlook, and it got that target in spades. I mean, tremendous movement out of that range. Now we're starting to build out the next key range here. Overall, the waves still suggest more strength ahead, and unless we fail back below 43 or 42.5, you know, buy opportunities continue to be bought. And what I see here at the moment developing is kind of a B-shaped profile there. That B-shaped profile, very important. The middle portion of the B, which is basically 42, 50, 43, is very important. And what happens here is that when you develop a range like that, any drop here that's rejected opens up a move to the top end and perhaps into the next zone above. And then you could perhaps build a bit more energy before you continue higher. So based off of how we've played out already, 70K could be the next target above, which is just incredible considering we were at about 4,000 during the March meltdown last year. Just incredible down here. You can see 4,000 and change here, and we've rallied tremendously since then. Overall, anytime you get this type of price action, it continues to show strength until proven otherwise. But I would say if there's a failure to hold that level right there, that's not a good line, let's draw it better here. If there's a failure to hold this level right there, that would open up a move that could take you as deep as 29 to 30 yet again. But even then, you have strong LVNs down below that could be bought for a return back up. Based on current price action and how this thing continues to build higher and higher market structure, we could be looking at further strength ahead. Again, 70K could be ahead. So while this one right here may see a little bit of weakness, and I still doubt that, but if it did, there's going to be an opportunity to defend for a rotation back up. So this one did hit our target again, continues to knock targets out time and time again. We had that 150%, which is basically 100% range extension from here. We had that target marked since the second week of January. We identified this as the key range trap for a push into that target and reached it over the last week. A tremendous move, and we'll see again, can it hold this lower LVN? Any pullback even as deep as that could offer strength up ahead. And that's right, you're right. This one does have a narrow pivot range this month. It had a narrow pivot range last month. And for those of you who have read the book, this narrow pivot range can typically be an indication of increased volatility to come, increased price range, and you can see the range extension that we saw here last week or last month. Now we have another narrow pivot range with clear support right here. So we'll see again. Any push even into these zones could still be an opportunity to push this thing much, much higher. So that is Bitcoin there. Those are the futures that I'll be covering right now. If you want some other markets, I can also do that as well. I wanted to jump on some stocks right now. There are some similarities across some of the big stocks that we've talked about that I'd like to bring up. Stocks like Amazon, Netflix, Apple, Adobe, Home Depot, these types of stocks we'll be looking at right now. And the similarities are potential distribution ranges at these highs. We've clearly seen an incredible rally in some of these tech stocks and some of these other stocks since those March lows, but it's very questionable right now that stocks like Amazon here, for example, have gone completely sideways over the last 4, 5, 6 months. As a matter of fact, we just finished 1, 2, 3, 4, 5, 6, 7.5 months sideways, exactly sideways. And typically, again, after you see a markup phase like this, you may see a reaccumulation phase at these highs followed by a continuation. But when that accumulation or reaccumulation doesn't lead to strength, it starts to elongate a bit and elongate and elongate, and then there's an inability for price to really get going to the upside. Again, not one to bet against Amazon, but this one is certainly showing signs of price distribution at these highs. I mean, based off the fact that this thing has rallied from 1675 or so and has rallied all the way to 3500, and now it hasn't been able to get over the hump for the last 6 or 7 months, could be very distributive price action. We've just seen price test the 200-day moving average as it's continued to trend up, and if there's any failure to hold 3K, that could open up a bit of downward rotation. I don't know how much markdown we may see, but clearly this LVN channel right here, actually let me grab this one, that LVN channel right there is potentially one to be retraded through. Whenever you see a significant rally like we did from here, from 2050 all the way to 3500, you leave behind a very thin LVN in the profile, and typically price needs to retrade those prices in order to facilitate trade at those areas. And if it's such a significant move, it may not do it all at once. Instead, it may partition that range, and that's what is happening now. We've traded here for many months, and we've built out a nice HVN. And again, if there's a failure to hold 2900, we may start to see price drop and retrade through here, maybe retrade in there, and then start its way back up. So again, I'm not one to bet against Amazon, but this look and feel is starting to look a bit distributive unless we can start getting through 3500 at some point. Otherwise, a failure to hold 3K or 2900 could open up a backfill of some degree down this LVN channel. If you look at Netflix, very similar price action. A tremendous rally off the March lows, and then it's just sat over the last 6, 7 months. 1, 2, 3, 4, 5, 6, 7 plus months of sideways price action. Still holding near the highs overall, but this key range right here is very important. And each time it's gotten close or above it, it's just been rejected. So again, it's starting to look a bit distributive here, although a very bullish 200-day. You got a really strong CLVN on the 460 side, so even if we were to drop into this zone, it could be a great fade back up. But it's very curious that some of these leadership stocks here have gone mostly flat, while there's been other value opportunities that have just doubled, tripled, or gone up 10x in some cases. So right now, just keeping an eye on some of these here, because when you go sideways for this long, again, it can tend to be a distribution phase that will lead to some sort of markdown. How much? Again, we can never tell, but at the same time, we have an LVN channel here that takes us down from 380 up to about 480. That could be an LVN channel that could be retraded at some point. So just a little bit of a caution sign here for some of these right now. Another one here is Home Depot. You can see here Home Depot. This was one of our buy candidates last March during the monthly outlook, in that if we're going into lockdown, then folks will start to, you know, improve their homes, improve their workspaces, and things of that nature. And that was indeed the case. It came roaring back tremendously. Perhaps not the multiples of some of the others, but to go from 140 to 290 in very short order was tremendous. And now, again, you've seen an inability for this one to go higher. It's just gotten shut down here. You can see a D-shaped profile here with the LVN on the counter trend side here. This is now breaking down through 200, the 200-day moving average, and we have a lower value relationship on the pivot range. Any strength into that pivot range could be seen as weakness, and we could see or begin to see some sort of markdown phase that begins. So right now, some of these bigger stocks, again, starting to look a bit distributive at these highs. And it always is a little bit worrisome when you have a significant key range like this, and then you just have a giant box that forms above it. Because at times, you know, if you fail on this edge here, and you have all of this action up above it, it can tend to be a tremendous return back down across these levels. So again, not expecting this thing to melt down unless we start to break through 250, in which case, you know, we could easily rotate back toward 210 or even 200. So something to keep an eye on there with Home Depot. Adobe. Adobe is another one. You can see, again, very clear how some of these stocks have rallied tremendously from these lows and have just gone flat at these highs. They've been rejected at these upper areas of the range, and support is clearly in view here. 440, very clear zone right there. You have a rising 200 here that has been met with some early strength right now, but again, we're not able to see any kind of acceptance above 500 just yet. You can see an LVN channel down below that could take us even deeper if this thing really wanted to. So again, perhaps a bit of distribution developing here at these highs, and if there's a failure to hold the lower edge, it could release a relentless sell-off of 1, 2, 3, or even more weeks. It doesn't take long, right? Even during this COVID sell-off, it didn't take long. It was about 5 weeks of hair on fire selling pressure, and then it bounced right back. So it doesn't have to take a whole long time. This market processes information very quickly now, and the corrections occur very quickly in most cases. So again, not anticipating significant selling pressure, but if this can't hold 440, 445, we may begin to see a bit of a markdown up ahead. Now, I do want to talk about something that could be bullish now. Gilead. Gilead could be bullish here. If you recall, if you were part of our monthly outlook in January, I mentioned that this was one of my favorite buy candidates. We had a lower low failure right here. We had a strong start on the first trading day of the year, and I mentioned at that point that this one has a shot to rally to 70, especially if it can reclaim 6150. So we're really big on market structure. You can see right here, this is the market structure from 70 down to 61.5. And this is similar to what we talked about with crude oil, right? By reclaiming 50 in crude oil, it suggested 65. By reclaiming 61.5 here and retesting it, it suggested 70. And it got, for all intents and purposes, it got right to that target. And like I'm warning with crude oil, once you get into that target, there is a tendency to go all the way back across the range, which has now happened in Gilead here. And now that we're back at the bottom of this range here, 61.5, you can see today's low, or actually that was Friday's low, is 61.65. This could bounce its way all the way back to 70 as this trades in the new trading range between 61.5 and 70. very similar to what we've seen back here. So right now we're seeing a reaction at that 6150. It's a significant CLV in the chart. We are undervalued compared to value, which is 66.72. You can see this gray line right there is composite VAL, so the value area low. Value area high is way up here. So to be below value, to be a CLVN, all of these things suggest that we could be looking at a bounce up ahead. Any failure to hold 61.5 on a daily closing basis would break that relationship, and that would open up a return back toward lows. But right now everything suggests that we could be looking at a move higher within the market structure range for Gilead from 61.5 to 68 to 70. Alright, the next one here, I wanted to talk Zoom here. Zoom has been one that has rallied incredibly here. Since last year it was around 75 or 80. Once the COVID sell-off started to happen, this one found support at 100, rallied nearly to 600, and has had kind of a wild range up here that's developed since then. This one has done a great job here of holding the 200-day moving average, a rising 200-day, a couple of tests, 2 of the last 5 or 6 days, and is held. This one is also developing kind of a compression here that's building some energy. This one could be looking at more strength ahead on a longer term basis. Now, if there's a failure to hold that 200 and we kind of cross back down through the LVM below, again, that would look suspect right here. That LVN is tremendous. So 325 is kind of that big time level that must hold. If there's a failure to hold that level, it can start opening up a rotation back down. Again, not expecting that out of this one, but it's always something to watch for if you fail to hold that level. As of right now, it's holding the 200-day. You got some compression that's developing here, which is building your energy. And this one could be building that energy for a retest back toward recent highs over the coming months. So that's one to keep an eye on right there. Another one based off of market structure is MLCO. This is resorts and entertainment stock. Again, as the vaccines continue to roll out, air travel continues to come back, you're going to start to see much more spending in entertainment. The reason I like this one is because of its market structure, and it's just a shorter term idea as well. But you can see clearly the market structure that's been in play here. You have the 15 to 20, now you have the 20 to 25. This is not a huge one by any means. But the fact that it was able to break strongly back above that $20 market structure level suggests again that it goes to 25. That's the top end of that market structure. Now, any pullback early this month into 20 could provide a rally to 25. So a 20 to 25 play could be up ahead, or any pullback below 21 could provide a bounce to the top end of the range. So this one's looking pretty solid right here based on market structure, and any drop into 20 could be a good buy opportunity to the upper end of the range. Now, a couple of swing candidates that I wanted to cover here, and then I'll get to some of your requests. A couple of swing candidates. I like Moderna here. Anytime you have a failed new low like this, that follows a strong rejection low like this, it usually suggests strength up ahead. Whether it's a one-day basis, whether it rallies just tomorrow, or whether it kicks off a 2 to 5 day move, that can tend to be seen a high number of times, at least percentage wise. So you have a very strong low that develops here right off this LVN. You have this shakeout leg that developed here today and a failed low with another buy signal. If price can hold the 150 to 151.5 on any pullback tomorrow, that could be the ideal entry zone for a continuation higher toward 165, 170, or maybe even into the monthly target up above between 176 and 186. So based off of the current month's low, We can use the average monthly range over the last 10 months to the upside, and we get ourselves a target between 176 and 186. So again, if price were to pull back anywhere between 150 and 152, that could provide a buy for a push toward 180 over the course of the next several days. So this is one to keep in mind from a short-term swing perspective, as it could rally over the next 1 to 2 weeks. Another one that looks very similar to this is Snap. Not as strong, but you can definitely see that this one has been trending nicely higher within this uptrending channel. This month has already started with a drop into the monthly pivot range here and below the previous month's close. Again, that's going to be your zone to watch for an entry opportunity somewhere between 65 and 66. Any pullback into that zone early tomorrow morning could provide a bounce opportunity to highs somewhere between 70 and 72.50. So again, that could be a good short-term swing candidate here. Any pullback again tomorrow morning could be a buy for a push higher over the next 1 to 5 days as this thing continues to trend up within the uptrending structure. Another one here to watch out from a short-term perspective is FCX. You can see how bullish this one has been, rallying from $5 to near 40 over the last year. Not as strong as some of these others we're looking at here, but you can clearly see this one has been taking the stairs on the way up. Every pullback toward the monthly pivot range has been bought. This one has not dropped into the monthly pivot range, but has started with a gap up here, and the early weakness this morning was defended. If this one can start getting above 35.5 pretty soon here, it opens up a move to 38 to 39 very quickly, with a shot to see a push to new highs. If there's a failure, however, if there's a failure to hold these 33s here on a daily closing basis, that'll kind of break this uptrending structure, and you could rotate back to the previous month's low. But so far, month over month, this one has been a very bullish candidate that has continued to see defense off the monthly pivot range. You're seeing right now a push into the bullish PIMA trigger zone, and that tends to be a buying opportunity for a near-term move higher, again, the next 1 to 5 days. Another one here to keep an eye on is SQ, that is Square. Square has been very strong. This one's had a pretty deep pullback here lately after a pretty strong rally that happened here recently. You get this strong high right there, and then you get a strong low that comes into play right there. That tends to lead to a midpoint retest, and that gives you a new key range. And that key range could be in play for a continuation higher down the road. Anytime you have a key range of this magnitude, call it 220 to 280. That is a 60 handle range. That means that you're targeting somewhere in the 340 zone up ahead as a 100% target, whether that's, a couple of months out or 3 or 4 months out remains to be seen. But a 340 target could be ahead based off of this impulse sell-off and a bounce back. If it can get the mid, it opens up the potential to get a move toward 340. So this one, again, short term, trending move back toward 270. You got 262 to 272. And then the longer term idea would be a push into 340. Again, this one kind of needs to hold the previous month's low here. And so far so good at the moment. So this one continues to look strong overall. And then we have Pinterest. Pinterest here looking very similar to Square, rather looking very similar to Snap. And you can see again a failed new low on Friday, a bullish open here today with a hold right at the previous month's close, an upward trending candidate here that opens up a move to new highs that could take you into 90 or as high as 93.63, which is the 100% target up here. So again, this is a short-term candidate. Any pullback as deep as $80 could open up a move as high as 93s over the course of the next week or so. So right now looking pretty solid within its uptrending structure and could be headed to new highs on a very near-term basis. Now, Again, not one to provide many sell candidates during this market because this market has been very resilient, very bullish. But there is one candidate here just to keep an eye on, and it's Starbucks. Starbucks had a very strong rejection here at the previous highs of the year here. The 108 rejection, it got as high as 110.5 this morning and was rejected right after the open and continued lower throughout much of the day. And this is very odd considering much of the market rallied today. A lot of the market was up, and this thing instead was rejecting. Not expecting anything tremendous with regards to weakness, but if you're going to reject the previous month's high and the previous month's close, you tend to rotate back to the previous month's midpoint. That previous month's midpoint would take you right to 103.20, and any pullback tomorrow morning into about 108 could provide about a 5-handle drop back toward 103s. So that's the short-term idea. Failing to hold 103 could open up a return back to the previous month's low at the bottom of the trading range. So again, this is not one. Now I haven't been one to offer a whole lot of sell candidates lately. This market's been very bullish, but to see this candidate reject at the highs during a strong day, and again you're rejecting the previous high and close. At the very least, you may be looking at a midpoint retest here. That's about 103. So any pullback tomorrow, say into 108, any rejection at 108 could open up a 5-handle drop to 103s with perhaps a little bit more downside from there. So those are several candidates that I picked off here from several of the scan lists and looking at. I know some of you have posted some candidates here to look at, one of which is Palantir. This has been a really good one for us since the beginning of the year. We had it as a long candidate on that day and had an upside target back toward 45.46, and that was a really good solid move. Since then, it's come all the way back down, and we have a lower value relationship for the month. So pivot range here, it's lower this month, and typically that would be bearish, at least near term. Now, one thing we have that's been holding really solidly here is that low right there around 22 to 24 has been a really great area of support for this one. It's held time and time again, and we got a little bit of a gap up here this morning, but kind of filled it a little bit, or at least pushed back downward. It really needs to start pushing through 26s in order to open up some upside. If not, one level we've been talking about in our trading room is 20 bucks. That's a great CLVN. It's also below the key range low here. So perhaps this key range is already done. We got very close to getting that key range 100% target there. But I still think that this key range is a really good one. So if we were to drop downward, as you see the 8-period average dropping tremendously, the 8-period average is below all of the slow-moving averages, which means there's still a bearish bias to this one. We could still rally even into 26, 27 and still be a selling opportunity in the near term. But I would say if you like this one, perhaps hold off for a test into 20 bucks, because if this thing were to drop into that CLVN and reject the key range low, there could be an easy bounce back to the midpoint, which is 27.30, and perhaps a move across the range into 33.5. So right now 20 bucks would be the key level right there. Okay, let's take a look at TLT. And here is the weekly chart that you're referencing. Yeah, that is a good one right there. TLT here is at a major market structure zone. Number one, you got this really great CLVN here, a rising 200 week moving average. We're in a weekly chart right now. Significant rejection in the previous week, and we started with a gap down, but we're holding that midpoint right now. it does seem as though we do have a decent market structure zone here, right? So you got about 135 up to 150. Tremendous selling pressure ever since it broke through the bottom of that market structure. So whenever you break down here, you tend to drop toward the bottom of the previous. Once you reject, you tend to bounce back up and then perhaps trade in this zone here. So for this one, it doesn't look bad. That 135 is tremendous. It also has 200-week moving average. I think there could be a push that leads this thing higher toward 150. The fact that we gaps down so much though from last week's close to today, it's not the best. But as long as it if it can continue to hold that 140, and again, it has a shot for a 10-handle move up toward 150. Let's take a look at NIO. NIO's been incredible here. You can see the weekly chart and how strong it's been. Tremendous selling pressure last week and then gapped above that week's mid. That's pretty solid. If you look at the key range that we have right here, here's that key range right there. This one's been a good one. We're right around the center of that range right now, which isn't as super helpful to current direction at the moment. But I would say any drop, even as deep as 35 to 40 here, could provide an opportunity to reject that key range low and reverse it back up toward 57. So, right now it doesn't have the greatest location. We have a lower value relationship here as well, which means any strength in here could be seen with met with some weakness. But overall, this key range is still one to keep an eye on, and I like that LVN right there, that CLVN below the key range low. If price were to drop down between 35 and 40, there could be a great reversal back toward 57 and maybe even higher. So those are some levels to keep an eye on for NIO. SVM is one right here. SVM, this is a kind of a cheaper stock right here. $5.50 is kind of a key zone right there to watch. A little bit of weakness has happened here recently. This is a pretty big day right there where it kind of gapped up and it had basically an island reversal turnaround. 550. Overall, you're going to want to see price hold to 550. If not, we may see a rotation back to $4. You have value down below. Even if it were to go way down here, that's below value and your rejection point. Not sure we get all that. I think you definitely, if you're bullish this stock, you definitely want to see a rejection of prices between 5 and 550, because that can open up a rotation back up and take you back towards 7 or perhaps 750. Right now, quite a bit of volatility in this range, so not the easiest, but the 550 level is a key level to watch for this one. Here is FUTU. Tremendous strength out of this one. I don't think I've seen this stock here. Look at that. It came out of the gate hot to begin the year, going from 40s all the way to 200. You have a strong CLVN there, which is very important. I'd like to find a key range out of this one, and perhaps it has this high to that low and the midpoint there, and that's probably the key range you want to watch. And it's basically 140 to 200 or 205, 204 quarter. So that's about a 65 point range. So I would mark that high to this low, and you have yourself your new key range, which means if price were to drop below that key range low, you could trap below 130 or at 130 to 140, and that could turn you around to the upside, and that could be pretty tremendous because with a 60 to 65 point range, you're looking at a move that can take you as high as 270 or so. So if you can trap, say, at 135 or 130, potentially you could double up to about 260 based off that key range. Again, it's already done a tremendous move, so but this market is almost like a video game market right now, where the multiples are just unlike anything we've ever seen. But that's a great key range low. You trap here, you return to the highs with a shot to go toward about 260. So I would mark that key range right there for big time levels. Oh, that's great to hear. That's great to hear. I'm glad you like the book. So far, so good. Again, if you have any questions regarding the book, you can actually go to pivotboss.ecofin.com. That's where our trading room is. It's free to join the broader community room, and then it's 50% off the monthly fee. You can get into our trading room for $49.50, and that could get you a whole month there. And we have a 10-part executive training series, five-day boot camps. We have a ton of great resources at your disposal at our trading room as well. All right, let's take a look here at... Awesome. Awesome. Great to hear, Ethan. Let's see. I think you had one more as well. I looked at Zoom, Palantir, and then there is AMD. AMD's been a good one. This one was actually on our buy list a few days back and barely held on to the midpoint. You know, anytime you have these type of big time rejection days here, you want that midpoint to hold. Any close below that midpoint can tend to break that pattern, but this is a really good one. That midpoint also is your potential entry zone. So when you open the next day and you pull back that morning, any pullback toward that midpoint can get you in for a continuation higher. This one has held. You do have a bit of rounded behavior here, but when you fail to kind of really break down and instead reject the way you do, I think holding 84s can open up a return back toward 94. The major level to watch here is going to be the top of this pink line right there. That top of that range, that's the midpoint of the previous month's high and low. So that midpoint right there. So if it can start getting through that, what is it, 87, 86, 79, it opens the door to retesting the previous highs. So that's an important zone. But again, you want to continue to stay above that midpoint for a continuation higher. So this is still on our buy list as one that could continue to the upside. Oh yeah, Jeff mentions you wonder what coffee is doing with regard. That's probably with regards to Starbucks as well. You know, from my perspective as well, I invested in about $800 in a new espresso machine, so I have not gone out to buy any kind of coffee at all, ever, and it's already really paid for itself since we've had it to begin the year. I mean, when you think at least every coffee could be $4 just on the cheap end, I mean, I make 2 to 3 a day for my wife and I, not each, I mean total. I'll make her one, make me one. I'll make, you know, a flat white or a cappuccino or an Americano, double espresso Americano. Man, it is incredible. And during this phase here, when folks really can't get out as much in certain parts of the country or the world, you know, you can see where Starbucks may be kind of reaching a bit of a limit in the near term based off of that. And inflation with commodities, yeah, absolutely. Here is Fubo. Oh, everything's kind of waking up right now with the after hours open. This one has earnings coming up. Looks like tomorrow after the market closes. This one has had a tremendous rally here as well since Q4 of last year. 7.5 to 62.5, and then back down really hard. Not seeing anything that stands out tremendously with regards to this one. You do have, you know, a strong impulse rally to a strong impulse high and then back to a mid, so you have that key range that could be in play. And you know, whenever you have a tremendous markup phase that gets that big explosive move, you know, a key range like that is designed to kind of create the playing field for new market structure. So it's kind of doing what it probably should be doing, which is backfilling all in here. Outside relationship with the pivot range with a lower close, which means there might be additional weakness to come in the near term. This one has a really great LVN right here at 2250, and I know we're at 39 nearly right now, but if there was to be a test at that zone, that might be a great buy-in or an add back if you have a long-term position. Beyond that right now, tough to tell other than short-term by being above this close and that low, that midpoint could be in play, and that puts you at 43.62 as a near-term upside target. So some thoughts on Fubo. And Nvidia. Yep, let's take a look at Nvidia. This one also had a really good rally from the lows. This one got crushed even before COVID, but then turned around. Let's take a look here. So back here, even again before COVID, just got crushed back here. Was able to make it off those lows. Strong key range here, and has been very bullish. I think this one kind of mirrors Apple in a way that, you know, it's rallied and has been stuck in a range. It tried to hold above this key range high and failed, and that's not super bullish. You know, if it gets above that key range high, you want to see it drive, you want to see it make its support and continue toward the extensions. And by failing, it kept prices in the range. And you can see the D-shaped profile developing here, and price basically trading around that HVN right now. So it's kind of where it wants to be. You have a significantly uptrending 200-day. You have a great CLVN at the back end of this range here around 470. So again, don't know if we'll make it down that low, but if we were to drop into about 465 to 470, that might be the best trap for a return back up the price ladder here. You'd be at that key range low as well. From this key range, by the way, that high to this low, you have extensions that take you out as high as $709.97. So basically $710. So at some point down the road, we may be looking at, you know, this range building the energy required to take us to 710. And again, if we were to see some sort of dramatic drop into this lower zone, then you could be looking at buying cheaper here for a return back up towards 710 over the course of several months, or perhaps, you know, 3 quarters or something like that. So that's the key range I have. Again, we're kind of where we want to be. This one's kind of trading where it wants to be, near the center of this range. Anything down here could be a tremendous buy opportunity for a push higher. All right. Well, you all provided a lot of great candidates to look at. I appreciate all of the support and all of the recommendations. Thank you for joining me for the monthly outlook here. Again, I will point you to pivotbossmasters.com/profits. And we will be going through a Pivot Boss Masters open house around lunchtime on March 3rd. You can click that Zoom link to be a part of it. You can learn more about this amazing training and tools that you'll have at your disposal there. Again, it's a one-time buy-in of just $995, and then all the future training and tools are yours at no additional cost, and that includes all the current tools and training that you have at your disposal already. You also get a gift here of the 3-part course, Swing Trade Pro 1.0. That's a $400 value. You'll also get 1 month of our premium trading room, which is a $99 value. And as always, this is a risk-free offer, 30-day 100% money-back guarantee, and you'll also get access to our 5-day live training that comes up next week. If you can't make it, I will be posting the videos immediately that same day, and it goes up on our on-demand site. Additionally, you can go over to pivotboss.ecofin.com and get more information regarding our trading room there, which is active with a lot of great traders. So again, a lot of great offerings that we have. If you're new to Pivot Boss, check out the book Pivot Boss, Secrets of a Pivot Boss. It is a tremendous book that folks really, really love. It's 10 years old now, perhaps a little bit older, and continues to get love from traders all over the world, which certainly warms my heart. So again, thank you all very, very much for joining me here today. Looking forward to seeing you all soon. Take care.